Here's how I would have learned to trade if I could start all over again. For context, I started trading in 2007 and it's 2023 now. A lot's changed. And in this video, we'll cover this in 3 parts. One, we'll talk about how to actually get started. There is scattered learning that's on YouTube, etc. And then there's structured learning. I'll give you an actual structured learning you can do on YouTube itself so you don't get lost. 2, we'll actually learn free resources that you can use right away to speeden up that learning curve, including this YouTube channel. So you should hit that subscribe button right now. And 3, we'll talk about mindset. If you don't understand mindset, you are bound to fail. So watch this video till the end. In 2007, I was given 50,000 rupees. The first thing I should have done was take out 30,000 of those rupees and invest it in an index fund in Nifty. Nifty back then was here and today it's here. What the fuck? But anyway, now that we know that was a mistake, that's what I should have done. I would have made this much extra money even without a sip, just that 30,000 rupees. Now, the reason why you actually do an investment in the index fund is so that you know you have money in the account to trade, but you can't use it and you know you have better chances in earning there. Now with the baki ka 20,000 rupees, you can't trade FNO, you can't trade futures and options. So wo to karna hi nahi chahiye if you are new. You should first master equity. And to master equity, you need to learn this sequence. And I've written it down here. Learn the basics first. What is the stock market? Why is the stock market? What's the history? Get into it. Watch a few videos too. I think we have a bunch of nice movies on scam, etc. Watch them. It'll give you context on the world of trading. Then move on to technical analysis. Actually, there's a lot of information on the internet on the basics of technical analysis. Why does it work? When does it work? When does it not? Don't spend too much time on technical indicators. Just learn technical analysis and maybe say 3 indicators at most. So after learning technical analysis, you should learn how a system works. A system is just a bunch of rules put together telling you when to buy, what to buy, and when to exit, even if it's a loss or a profit. This is called a system. For example, one of my earliest systems that I tried was basically called the trend line bounce system. Okay, I made that word up. It was basically, I draw a trend line. If the market comes near the trend line, I would just buy it. And I did this for a long period of time. And then I did the opposite. When I wanted to learn futures, the trend line broke and I shorted Nifty. And this was in 2008 when the market crashed. And I was on futures. My account doubled and tripled and I was celebrated as a stock market genius. But I was just lucky. I could have blown my entire account because this is based on a weird line I drew on a trading software. So you should not trade futures, but you should have a system in place. So one example of a system is a moving average crossover, where if there's a crossover over a long-term chart, like a weekly or monthly chart, you're buying, and when there's a cross under, you're actually exiting. This may not be the best way to trade, but at least you should understand how system trading works. It's methodical, it's mathematical, it is not a guess. And I think that's what you should spend the next few months on, what system trading is. One of the biggest traps you'll fall for is actually trading once you've found a system. And I'll tell you exactly what will go wrong so you don't have to make the mistakes I made. Look at this simple system. Don't worry about the entry and exit. Just imagine a line going up and a second line going up as well. Whenever this cross happens, we buy. And whenever the opposite happens, there's a line going down and another line crossing below it, we sell. Simple. Don't get into the details, but let's look at some actual trades here. Here you will place a buy order, market went down and you lose money. Here you will try to short the market or buy the market and the market went sideways, lose money again. So on and so forth. All these confusing lines you see over here will result in you losing money. Now the problem is not the strategy. The problem is you. You looked at a chart and believed it. Never do this. You are supposed to actually quantify this. And that, my friends, is called backtesting. When you take all of these strategies, put it in an actual Excel sheet or AmiBroker or TradingView PineScript or Python or some way to actually know number of trades, number of wins, number of losses, how much did you lose when your stop loss was hit, how much did you make when your profit target was hit, and see over the last 5 years, did you actually make money? Which is why I'm saying after you've learned strategy, move towards learning how backtesting works. And please don't trade before that. And if you do, maybe trade one share just to understand how it works. But learn backtesting. So in summary, learn the basics first, move towards technical analysis, then learn some kind of strategy. Then comes the hardest part, learn how backtesting works. Then think about actually trading it. And this brings us to part 2, which is free resources you can find on the internet that you can trust. If you're an investor, then screener.in is a great place for you to actually run screens, find companies based on fundamental analysis criteria. So you can search companies with the highest market cap, with the highest profit margins, sales that have been growing over the last five years, etc., etc. If you're a trader, which I'm sure you are, use TradingView for charts. It works really, really well. There's also Chart Inc. and a bunch of other websites. There's also LearnApp's YouTube channel. If you want to go to trustworthy places, you're in the right place, right? Right. So subscribe and watch the videos that we push out because we try our best to give you the best quality education in stock markets right here. So there are 2 types of resources you'll find on the internet. One is a tool where you input a bunch of metrics and you'll get an output and you do the analysis yourself. The second kind of resource could be a blog, website, Telegram group, or even a YouTube channel where they tell you what stock to buy and sell. Now, that may be working for them. You have to make sure at the end you are backtesting and deciding for yourself what to do with your own money. In any case, no one should decide for you. So if you find a strategy that you really well for someone else, don't follow it. Do it yourself, backtest it yourself, and that final decision should be your analysis, not someone else's. The third part is trading mindset. Now, this is the hardest part because we come to the market to put in energy to actually say, I'm going to earn X amount in the next X years, and that will get me my vacation, my home, etc. But here is the reality. Trading is just like a business. Now, I want you to imagine a business. Does a business post a profit or a growth every single year? No, neither will your trading. Do you think a business has professional managers, a plan, an annual operating plan, quarterly plans, weekly plans, and then people have to follow that plan to achieve a goal? Well, that's exactly what your trading has to be. There has to be a back-tested trading system that is followed every single day without fail. In a business, things sometimes go wrong and sometimes go magnificently right. But over a 5-year period, it will be growth. But you can't look at business over a 3-month, 2-week, 1-week period, right? So the same thing, you can't look at trading as a short-term thing. You may do it very often, but results happen over years, possibly even decades. The basic thing over here is you can't risk ruin, which means you can't risk everything. You can risk 0.5% on each trade and lose a maximum of 5, 6, 10% on your capital. But if you lose too much, you won't be able to play. So risk management is actually more important than patience, consistency, and a backtested system. In the end, I'm sorry to burst your bubble, but as you age, time will actually become really, really fast. So 10 years is really not that a long time. If you balance trading and investing properly, you can actually make money over the long term. Just make sure you understand what you're doing. And if you don't, just put all your money in an index fund and just sleep. We are very lucky we live in India, jahan pe most of the demographic is young. Most of the demographic has not really entered the workforce yet, and there's a lot of cash coming into the economy over the next 2 decades. Use this basic information. If you don't have the time, just learn investing. If you do, then learn the magic of trading and how you can earn that extra alpha over Nifty by just doing a bunch of few things. And of course, don't forget to subscribe to this channel because we're super honest and we'll help you out and say something nice in the comments. If you found these useful, check out the other videos we have. See you in the next one. Sir ke face ke saath.
Learn to trade, you to escape to one.
And we have sound, hello, sound, hello, sweetie, hello, sweetie, hello, sorry.